You're sitting at your desk in January 2021. You work at one of the most powerful hedge funds on Wall Street, billions under management, a team of the sharpest minds money can buy, and you've made a bet. A big one. GameStop, the struggling video game retailer, the company people go to buy discs in a world that's gone fully digital. You've shorted it, heavily, which means you're betting the company is going to collapse, and you're not alone. In fact, 138% of GameStop's available shares have been shorted by hedge funds, more than the entire float. Professionals piling onto what seems like the most obvious trade imaginable. Then something impossible starts happening. The stock goes up. Not a little, not a blip. It starts climbing, and climbing, and climbing. You don't understand why yet. You don't know about the man in a red headband live streaming from his basement. You don't know about the Reddit forum with 7 million members who are about to weaponize the stock market. You don't know that your entire fund is about to be dismantled by a guy who works at an insurance company in Massachusetts. His name is Keith Gill, and he bought $53,000 worth of GameStop stock because he actually liked the company. Not as a joke, he'd spent months digging through GameStop's financials and concluded that Wall Street had gotten it wrong. The company had real assets, new leadership. He posted his analysis online under the name Deep Fucking Value. Most people laughed at him, called him delusional. The stock was dying. Everyone knew it. But Keith kept buying. He kept posting screenshots. He kept explaining his reasoning in a forum full of people making wild, reckless bets with money they couldn't afford to lose. And slowly, people started listening. Here's what Wall Street never understood. Short selling has a flaw, a catastrophic one. When you short a stock, you borrow shares and sell them, hoping to buy them back cheaper later. But if the price goes up instead of down, you have to keep buying the stock at higher prices just to survive. You're trapped. The more the price rises, the more you bleed. And if enough people push that price up simultaneously, the trap snaps shut. By January 22nd, GameStop was at $65, then $76. Then Elon Musk tweeted, GameStop, with a link to the Reddit forum, and the stock shot to $145 in after-hours trading alone. On January 27th, GameStop hit $347 per share. Keith Gill's $53,000 investment was now worth $48 million. Melvin Capital, the hedge fund most exposed to the short, was losing more than $1 billion a day. Not a week, a day. The fund needed an emergency bailout of $2.75 billion just to survive, and they still lost 53% of their assets in a single month. $6.8 billion. Gone. The most powerful hedge fund on Wall Street, destroyed by a forum post. But here's where it gets darker. On January 28th, Robinhood, the trading app used by most of the retail investors, suddenly halted all buying of GameStop. Not selling, just buying. Millions of small investors were locked out mid-squeeze. The stock price crashed. Hedge funds breathed again. The backlash was immediate and explosive. Congressional hearings, the whole world was suddenly asking, who do the rules actually protect? Keith Gill was called before Congress. Senators asked him if he was manipulating the market, if he was working for someone, if this was coordinated. He looked into the camera and said simply, I like the stock. He wasn't a mastermind. He was a guy who did his homework and posted it online. The community did the rest. Melvin Capital never recovered. It shut down permanently in 2022. And Keith Gill? He disappeared from the internet for 3 years. Went completely silent, no posts, no videos, just gone. Then, in 2024, he came back, posted a single screenshot. GameStop surged 60% in a single day. One man, one post. Wall Street panicked again. Here's what this story actually reveals. The financial system had a hidden rule that everyone accepted without questioning. Smart money wins. Big players set the price. Small investors follow. That's how it's always worked. For decades, Keith Gill didn't hack the system. He didn't break any laws. He just did what Wall Street does every single day. He researched a company, decided it was undervalued, and bought it. The difference was that he told people about it on Reddit instead of in a boardroom. The rules weren't different, the access was. And when ordinary people used the same tools, just together, loudly and in public, the system didn't know what to do. That's the part that never made the headlines. It wasn't a David and Goliath story about luck. It was a story about how much of Wall Street's power depends on the assumption that no one is watching. Keith Gill watched. And for 1 month in January 2021, the entire financial world had to reckon with what happens when everyone does.